The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And, you know, what's happening on this day out here? Well, we always have to start at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, something has happened, and for me, I was kind of bearish yesterday. Now I'm extremely bearish. I've got results from my model coming in, and today probably should seal it. That was just the retest. In fact, my model hasn't been as bearish as it was in May 5th, actually, of 2008 in the housing debacle. Does that mean that we're going to come back down as hard as that? And the answer is no. But when we look at a lot of people call it a stock market. It is a market of stocks. There is more weakness right now than any time going back to that May 5th date. And why that was heavily concentrated in the financials and others, this seems to be much more broad-based, and that is this lighter volume and many stocks headed down with very few stocks headed up. Those stocks headed up tend to be in the indexes, tend to be bought in the ETFs. So you've got a tale of two, rich man, poor man, right? You got the rich men, they're in the big indexes, they're Apple, they're being flogged on a daily basis by Buffett and others. Then we have the rest. Now, is it a great signal? Well, at these levels, it's kind of like if I predicted rain tomorrow. If I predicted a 10% chance of rain, you'd probably just figure it wasn't going to rain. Well, I'm saying that right now my model has a 10% chance of higher prices, and 90% of lower prices. So I'm kind of feeling pretty good here. What do I need to know that, we got zero rain? Well, I need only about 10, 12 points higher in the S&P cash. So the risk reward here is fairly gigantic in a historical context. But again, a 10% chance of rain is not a 0% chance of rain. But I am heavily in the bearish camp, and that is by the overall movement of stocks, the amount of advancers and decliners, the volume coming back in, and the fact that the summation indexes have really turned lower. And normally you get your surprises when that happens. So I will expound probably a little bit on this later in the show. But what can you say? In the meantime, we need to get this thing kicked off. And, of course, as we look into – let me close a few of these windows here while I'm talking. As we start the show, we're off a couple of points. Got up to 2404 on the S&P cash. We're down about 6 points, no big deal. But where we should be, about 3.5 billion shares right now, we're turning about not even 2.2 billion shares. And 500 million of that came in after we came off the 2401. So huge volume already off the top from about 11:30 today. So we are at least getting some people out here. I'll say that also that we continue to have one of the things that makes a market incredibly weak and susceptible to huge movements and downturns and gap downs in the morning when you walk in, is just about nobody short the market. And that means that there aren't a lot of people there to buy underneath you. If the market does turn down, that is one of my conditions for the market. And, we see people with 10-year, 15, 20-year calls on the VIX being low. I heard somebody say something today that there's one thing about that. And even if you're bullish, I think the most ridiculous thing now would be able to say the VIX is at all-time lows. I don't want to swap out my equity positions for a option position, because guess what? Options are cheaper than actually owning the stocks right now. And what does that tell you? It tells you there are a lot of people on one side of the boat. Anyway, we got to start off with a little bit of history today.
Then it's all just a little bit of history repeating.
And what do we have for history today? Well, in 1901, as competing bull and bear factions try to corner the market in Northern Pacific Railroad stock. Yeah, well, I've talked about this before. I've got that book that really highlights this whole 7-year fiasco into trying to corner the market on railroads. Basically, in 6 weeks, we saw the Northern Pacific go from $96 to $1,000. Only 5 weeks earlier, the market crashes. The Dow Jones Industrial Averages plunging 6% today with a nearly record high volume of 3.1 million shares for the day. Samuel Bolton, a leading brewer in Troy, New York, who'd lost a fortune speculating on these and didn't sell at the top, commits suicide by diving into a vat full of hot beer. And I don't know. Would it have been better if he died in cold beer? I don't know. But on this day, now, of course, the fight for the Northern Pacific went on for a little while longer. Jay Gould and some of the other big men of the street got it, and then were forced out with one of the bigger monopoly cases with the federal government finally busting up all these different railroads and why we have stuff there. But a great part of history that I think any trader should know. I'll bring that book out during the break. I just forgot to bring it back out. But it's Harriman versus, I don't think of it. On this day in 1901. Snap is expected to report earnings tomorrow night after the close. This stock continues to have about 30% of its trades every single day come out as shorts. Wouldn't be short this thing. Could it be so horrible that it goes down? It could, but this may be the one stock that I think bucks the trend for a little while, and probably one of the stinkier IPOs. But when you look at some of the numbers that have come out lately on Snap, they have more teenagers than Facebook does. So are you buying earnings or are you buying eyeballs? Well, I don't know what the market's going to do tomorrow night. Wouldn't be short this. When we come back, we're going to start looking at the charts, and we'll be talking about why I suspect that the market has some rather genuine weaknesses that will be exploited.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And 2.2 billion shares as we start the second segment here today. Wanted to start getting into some charts and we'll get away with that, but I wanted to do one other thing, and well, I can't do it easily, and you won't be able to see it. But every day in my daily newsletter, I publish the advanced decline line out there, and I also publish the amount of dollars traded in the market, and we've come way off. There wasn't a lot of juice, and I'm not just talking about average share price. I'm talking about actual dollar prices. And, when you see $20 billion less in a day, or $30 or $40 billion less over a handful of days, the money flow is just not with you. And that's really starting to concern me about the market. But more than anything, the advanced decline line, if you look at the summation index and you read it on the long term, it's had a great, huge divergence for a long time. And eventually those things tend to snap back together, along with basically the same thing that we had happen, which is a lot of gap downs in previous starts of bear markets, and everybody being bullish and very tough. But they tend to gap down. And then the people that are long tend to not take their losses and then ride them down. And that's kind of the way a bear market works. And normally when they give up at the bottom is the time that the bear market is over. But I could see a lot of people seem to be rather euphoric. And I take a look at from all kinds of stuff, from gold rolling over to people going nuts over Bitcoin, and kind of the gambling mentality in the market, along with the idea that literally there can't ever be a pullback in this market. And everybody on one side of the boat. I just don't, we're at historic lows for bearish sentiment after we've gone up historically high. The risk reward just seems to be back asswards to me. anyway, let's start looking at some stocks. These will be stocks with either earnings and or news today. Cadia Communications, this thing has been in an ABC down. Got a little pop out here with no volume on its news. Blue Buffalo, this had been one of those IPOs that had been rather troubled. It had kind of a nice run, but again, we're just back into this lower highs and higher lows in this thing, and eventually these things are going to break. Disney comes out after the bell tonight. So what do we have going on? Oh, this is Tuesday night. Excuse me, I got my wrong list up here. These are after the bell. Disney after the bell tonight. A lot of really sick news in the ESPN sector. I haven't really gotten a good signal to pull the trigger short on this one. One close above the 3x3 displaced moving average, one close below it. And this thing could easily go back to 105 and much more likely back to 95. I think this thing has been way overpriced for a while. Electronic Arts, again, after the bell tonight. No sign on this one. Could this continue higher? Fossil, this thing has been beat up forever. The whole idea was that we were going to see everybody with an iWatch. The truth of the matter is no watch, not iWatch, no watch, including Apple's watch. Everybody just has a phone in their pocket. It's got a clock in it. No need for watches anymore. A very light bounce out here. Fuel, a IPO that kind of stunk for a long time, kind of has come off the bottom in the last year. Double topped out here recently, kind of pulled back a little bit to $5. I have to say that without a buyout, these guys are in real trouble. And that is what you would be betting on for higher prices. If you're into the marijuana stocks, you've got maybe the first time in a while that you might see some strength in GW Pharmaceuticals. It is the sole company with the right to make pain-reducing drugs out of marijuana. Everybody else is illegal. No matter what anybody tells you about what the states pass, federal law still says you can't buy it. So I've seen a lot of people go after stocks that were supposedly, quote, quote, marijuana stocks. This is the only legal thing. The other ones are, in my opinion, buying a pig in a poke. But this one actually doesn't look too bad. It's gone through a couple of previous lows. Got a little hammer out here today at the 110 level, and also no volume. So keep an eye on that one after the bell. JAZZ, Jazz Pharmaceuticals, the IBB really hadn't been able to get going fairly well. This one has kind of come back through the highs. The downside is just no volume back up at these highs. You've got three gaps, so the potential is back down to 135 if this thing misses. HCHP, Microchip Technology, this thing's double topping on no volume. And again, you had the February 8th spike with 11.7 million shares. You got into that with April 27th with 2.6 million shares, so 1/5 the volume. You're up today on 2 million shares. If this thing even tends to whiff, it's going to $70. You really have to have a blowout, I think, to get above that February 8th high. NVIDIA, I've talked about this one for a while, but this is a good case of lower highs and higher lows going out since it kind of whiffed on earnings. I continue to write about this in the Tech Insider, and that is the potential for a lot of the business that they had in the last year to go away, and quite suddenly. I can't predict exactly when that's going to be, but there are new products aimed at this company's cash cow of the last year, and the reason that they went from $20 to $120. But I'm saying probably within the next 6 months, they're going to have severe competition in the machine learning business. Priceline after the bell tonight, this thing has not given much of a sign out here, but is one of the biggest and most extended stocks. Everybody talks about quite a few of the other ones like Tesla. Priceline may be the most extended stock on a price basis without any significant pullback. I would not be surprised to see if we're going to get a big surprise in the market that it comes from Priceline, and wouldn't be surprised that if it does whiff, that you could see within a week it back down to the 1650 level. It's been being pushed since this last high on the 28th of February. It has incredible risk in it. I'm playing this on another way through another stock, because if this blows up, but this is where puts on a day like this, and especially a VIX that's at nothing, tells me that playing the opposite side of what everybody's looking for is one of the sweet plays. A little loss or a massive win. And look for that in this sector after the bell tonight. We'll be back in a few more.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back on the 1st of May, we started to see some reports, and it was kind of an interesting way to look at it. But this is my talk about why I suspect that risk is heavily in favor of the downside and just incredibly mildly to the upside. Markets can always run a little farther than you think. But this is what we saw on May 1st. Right now, the 10 largest firms in the S&P 500 have accounted for 37% of the index's return. I'm going to say that again. Right now, the 10 largest firms in the S&P 500, that's 500 stocks, actually 502 stocks. Right now, the 10 largest firms in the S&P 500 have accounted for 37% of the index's return, more than double their 17% market cap weight, according to Goldman's data. Apple, Facebook, Amazon, Alphabet, Microsoft alone make up 28% of the return, with this 12% over the market value. And I will take the opposite side of the trade of others who say that this is not concurrent with markets that crack and crack hard. Does that mean it has to crack in the next 15 minutes or an hour or tomorrow? No. But the giant surprises come with moves like this and very thin leadership. And one of the reasons out of about 10 that I'm fairly massively short the market. And even looking at the indexes today. So there was a question in the den. Hopefully that answered it. The question was, rally phase since April 13 led by surge in Your assessment of whether there's a price risk in these. I suspect that everybody's going to try to buy these on the way down. But I mean, we saw, I guess the question is there price risk? Yes. Would I be buying these at highs? The answer is no. Will they come back? I think that they will. But again, I think that there are a lot of other stocks that have just been flying in the face of absolutely nobody believing that there's any downside. Stocks like Pricelines and others, where you could see massive changes overnight when these things come out. And think about Priceline. A lot of those had a lot of issues with airplane flying, immigration, lots of other stuff. Does it just seem like that business is going to do nothing but go higher? Airline business? I don't know. Anyway, I am incredibly reticent to not short markets with incredibly thin leadership, and that's what we have. Not only do we have incredibly thin leadership, we have incredibly thin short positions in both the futures now and the options. So put that in your pipe and smoke it. I will take the opposite side of that trade, not because it's absolutely got to happen, but because I know that the payoff is going to be massively asymmetrical to staying long here. So anyway, that's what I'm looking at. What else do we have? Silver Wheaton after the bell tonight. There's a few more gold stocks that have come out and are going to come out after the bell tonight. But with the beating in the gold market, what do we have now? 12.15. What was it? 12.95, 12.97, whatever it was for the high. Certainly down. And again, zero risk in this market, zero thought. These are the kind of bloodbaths, though, that make me actually interested in gold. I haven't been interested in it for maybe several years, but to me, this is the kind of thing where you could wash everybody out of those triple leverage ETFs in the gold market. So anyway, I see stuff like that. Silver Wheaton tested its previous low with higher volume, so you have to worry about that after the bell. SPWR, which is Sun Power, these sun stocks, solar stocks, just continue to look rather weak. I think the only reason they've been doing a little bit better as of late is because Tesla bought the ultra stinky Solar City, and just a few less stocks that you can actually invest in that rather moat-y, can you call that a word? Moat-driven stocks. As we were talking about other stocks in the travel sector that may be incredibly risky, TripAdvisor coming back up into its huge volume down day of the 16th of February. That came down with 12.4 million shares. We're back into it with 2 million shares. This isn't where I'd like to short it, about 51 bucks. Probably one of the best of all things would be for this thing to pop to 51 bucks, have no volume tomorrow, and me pull the trigger on this thing short. But looks fairly interesting. TrueCar, again, you've got a little setup here with the possibility of a three gap play down to 10 bucks. In this one, just don't understand it. Sales in all cars are going lower. This one looks awful risky to me. TSRO, Treso. This one had gone to a high 192.94, got back down to 131. That's pretty much where your support is. So not a lot of downside in this thing. Don't know if there's any upside. Yelp, of course, another stinky IPO of the last few years that had a flawed business model. Again, this one did finally test the previous November 1st low of $32 at $31.60. Did so on about 2/3 of the volume. So you do have kind of a bottom in here. What you dislike about this thing is it came down and off the top with volume back on the 10th of February. It's been kind of going sideways out here. My guess is probably a few too many people short this thing. But maybe if you got a little pop in this thing, got a few people get out of it short, this may be yet another stock that would be very interesting in that. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. You can post messages in the den. This would be a very good day for a phone call. So that's what it is. Okay. What else do we have out here? We're going to go to, this is Tuesday night. We're going to go to the movers from today. Did I actually have that? Did I do them right? Nope, I didn't. We're going to break. We are going to break here in a minute. Let me reset for those. What do we have? Pets came out with earnings this morning. This is a drug company for pets. I guess actually yesterday, right? I guess, yeah. So you've got a nice pop in this one, a little continuation out here today. Very interesting. Let's go back and look a little bit farther out here. Just a huge sign of strength and a continuation out here today in pet meds. So 26 bucks, 25.75. If this thing could come back to that area on light volume, that $24 area is kind of where this thing broke out. You want to be looking at it somewhere in there. Hopefully we get a market pullback and you get an opportunity to buy some of these, and not the nags that have been absolutely whipped to the finish line up here at 2,400 in the S&P cash. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, I messed up something out here, so we will do it. Anyway, we were talking about stocks that actually came out yesterday. I wanted to talk about some of the other ones. Let's go through some of the others in this segment that I've been looking at. We'll see how some of these things have gone. I want to look at a few of the other bigger indexes out here. One of the things that caught my eye last night was the SDS and some of these ETFs. Previous low on March 1st for the SDS was $13.06. That's back on March 1st. 15.2 million actually. So what have we had as we've broken through those that 1306 low the last few days? 5 million shares yesterday. 3.5 million shares today. 2.8 so far. Certainly doesn't look like much. Also from the March 27th high in this, which is of course the bearish version of this, pulled back with a little bit lighter volume. Now we have at least an opportunity to bounce for short term and maybe even longer term. But this is the first time in a long time we've seen the rabid bullishness not really show up in some of these ETFs. SPXU, kind of the same thing. When we look at these $16.41 back on March 1st, 2017. What do we got? 7 million shares, right? So what do we have the last 3 days in this one? 2.3 million shares, 1.9 million shares, 1.7 million shares today. But guess what? This one's kind of looking like maybe it's wanting to get its head up. And again, the volume over here on the right-hand side, very light. The energy, just a little lighter on this pullback out here. So again, am I looking for the end of the world? No, but I wouldn't be surprised to see this one go from 1622, its low today, to 1725 in a heartbeat. These things can bounce off these overextended lows where everybody is long. Other stocks, SSO, here's another one. Here's the Ultra 500. This is the bullish version of it. Well, I'm sure we're going to have blowout volume on the high here. The answer is no. About the same volume. March 1st, $87.64. 2.5 million shares, got 2.4 million shares. So again, that was the best day. Last 3 days, 1.9 million shares. Yesterday, just 1 million shares. Today, just 606,000 shares as we break through that previous high. So I was looking for volume in all the wrong places. I'm going to have to turn that into a trading song. Looking for volume in all the wrong places. What else do we have? TDC. What is that? Teradyne, and not much in that. TMK. Torchmark. I don't think I had many else going on out here. Yeah, we'll do it that. Since we've had some discussions in Apple, Let's take a look at that one. A nice little spike out here today. Not much in the way of juice. We had 49 million shares yesterday. We've got just about 30 million so far today. And again, this is the endless flogging that we've talked about on CNBC and Fox Business News now, as they get the tail end of Mr. Buffett's crumbs on their channel. But again, nothing out here really telling us we've gone to a new high. Actually looks a little bit bearish out here to me, but nothing that changes the total out here. What do we got? 23.98 on the S&P cash. So we'll look at that. What else do we have? That's Apple. Let's take a look at Amazon. Amazon today, type it correctly. Amazon today has decided to drop the $35 minimum for free shipping to $25 to go up against Walmart, who apparently was kind of eating into some of their business lately. This did pop a little higher. No real sign of strength. Again, no sign to sell this yet. One of the stronger ones out here. But again, I think investors looking at this are going to say, okay, now we've gone back into a price war with Walmart. Walmart would probably be smart just to get in a price war and take away a little business from Amazon, even if it costs them a little, because it's going to cost Amazon a whole lot. Anyway, last time we kind of pushed up here was a reversal gap up on the 28th of April. You came up here with about 7.4 million shares. Today we got about 2.4 million shares. So again, does this mean that the wheels fall off the wagon tomorrow? They don't. It's just a broader market out here that seems to me right with cracks that could turn into huge crevices. Microsoft, this thing's been going sideways for 4 days through a lot of good news and releases of their new laptop, which looks very good. I got to see one last night from a friend of mine in the industry. They will be for sale, I think, the 15th of June. But very, very interesting product. And I think a lot of people looking for it. But does that mean this thing could just continue going to the skies? Well, all it's doing is going sideways now. One of the other things, I think it starts tomorrow or later today. I think it's tomorrow. They start their big developer conference, so there may be a few announcements out here on that one. We talked about Facebook, and again, this thing kind of jumped up a little bit, gone sideways out here. Not a lot of juice with push earlier today, so I continue to wonder if there's anything left in this one, but we will do. To see what else. Again, you can give me a call at 877-927-6648. What did we see? Someone wants me to look at RIG, R-I-G. Take a quick look at this one. This one had been heavily shorted and pretty much had its short squeeze out on Friday. Yesterday, almost nothing in the volume, and even the short squeeze didn't give much out here. Again, when you start looking at these commodities, they tend to tell you a story of deflation, not inflation, when you look at both gold and oil. I think this is the third day that they've tried to spike oil up in the morning only to have it sold off by the end of the day. I think this is the third day, isn't it? I'd have to go back and look at a chart. But all I hear every morning is that crude is bottom and everybody's buying. I see it back in the 46s, and then I look back later in the day, and it's back under 46, just a hair under 46 today. But again, until I start seeing any kind of significant rig count decline, I suspect that crude is under fairly extreme pressure, and gold off 1250 today also. Other stocks of interest out there, Netflix, NFLX. Take a quick look at this one. Again, this one is on a 3-gap play. I would have liked these 2 gaps higher to be a little bit more. But any kind of significant pullback in the market, I would target 110 on this. No signal yet, But there's a lot of calls for this to come back to the one level. It's we'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had an email here during the break and asked me about what I think about what's happening in the short department and why I'm saying that there are very few shorts. Well, I've done a few things, and probably not going to see it real easily because I made this program for myself, not to really show other folks. And I've been adding features to it. Eventually I'll clean it up and make it a nice looking thing, but it's always a product and work. But what I do is I found a source. Actually, I had to get several sources and compile the data to find just what's happening out here in the short department and how many shares are shorted each day. Now, I don't know how many of these go home each night, but I know how many trades are originated with a short position. You can figure that market makers have the power to put on shorts without covering the other side of it for a day or two. There's some other reasons why you would see this volume out here. Even if nobody shorted the stock all day, you might find the market makers doing it to make a market in the stock temporarily. So it's more important to see the trend out here. And again, we had 12.4% on the 4th of every share in the S&P 500 was shorted. Yesterday, 11.8%, Friday, 11.8, yesterday, 11.7. And normally what we find out is that the markets tend to bounce on about 14 to 15% short, even as low as 13%. But 11%, pretty short stuff. I can do the same thing in the NASDAQ, and you can take a look at it. Now, it was the one that had a few more shares in it shorted yesterday, but again, this one's a little higher. You can see 17, 18% short as kind of a signal that too many people are getting short. But this one had just a little bit more, but certainly it hadn't really spiked. And we've had kind of a long run of very low shorting in the market. And that tends to, I do some longer term work out there. But again, if you look at puts and options out there, very few people buying them. That's why you see the VIX at huge lows. That tells you one thing. If you go back and look at the actual shorting of the equities, that tells you some more. But pretty much all of these things are telling you that everybody's on one side of the boat. And as soon as you get enough people on one side of the boat has a tendency to flip over. Because guess what? You need more people on that. You need more people to balance out a market. And we have a fairly unbalanced market now. It has had a huge run up with very few pullbacks. The last few weeks has been on declining volume, and fewer stocks are holding the market up. And in fact, if we actually look at the data out here, I do my own McClellan Summation Index. It's headed down, and generally the thing to do, let me pull this up here, is not trade on the opposite side of the summation index, because generally what happens in that is where you get your surprises. But at the same time, eventually the market will tend to catch up. Now, we had a huge run up in the summation with very little to do with the market going higher. It, again, was on very few stocks. We've kind of come off that one. The scarier one for me certainly is the NASDAQ one, because that has been going down for a while. Why the market's gone back up. Don't have enough time to show it now, but that's been headed down for 7 days. So we'll look at that tomorrow again. Even if you're long, it's cheap to buy options for protection. Just think about it. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.